Welcome back. Today, we are going to unpack something truly fascinating, the incredible real-time connection between international headlines and the crypto market. Believe me, it's a story of conflict, regulation, and maybe, just maybe, a huge shift in how we read the global economy. So let's just jump right in with a question that gets to the heart of it all. What on earth could escalating global tensions, we're talking about the US and Iran here, what could that possibly have in common with the price of Bitcoin? Seems random, right? Well, the answer is pretty surprising, and it tells us a ton about where the market is at right now. It turns out that link isn't just there. It's incredibly direct. We are literally watching geopolitics move the market in real time. It's like there's a direct line connecting those breaking news headlines straight to your crypto wallet. And what's really wild is just how fast the market is reacting. I mean, just look at this timeline from the last 48 hours. When the U.S. delayed military strikes, the crypto market breathed a sigh of relief and prices went up. When rumors of de-escalation started swirling, things held steady. But the second Iran rejected a peace plan, bam, an almost instant price drop. You can literally see the cause and effect playing out in minutes, not days. And we're not talking about a small little nudge here. That sigh of relief from the market was huge. When the news broke that the U.S. was hitting pause on strikes, which signaled, a potential cooling of tensions, Bitcoin didn't just inch up. It surged past the $70,000 mark. So here's the bottom line. Right now, crypto is acting like a textbook risk asset. When you see scary headlines about war escalating, uncertainty shoots up and prices drop. But the moment you hear whispers of peace talks, uncertainty falls and prices get a nice pump. It's a crystal clear inverse relationship, and it's being driven entirely by news about global conflict. But it's not quite that simple. It's not just a one-way street. Let's move on and look at how this all builds in to what is basically a headline-driven tug of war. We've really got to understand all the different forces that are creating this wild volatility. And this slide just lays it out perfectly. On one side of the rope, you've got the massive weight of geopolitical risk, fears of war, rising oil prices, and it's all pushing asset prices down. But on the other side, you have this stubborn diplomatic optimism, hopes for peace, talk of de-escalation, and it's pulling prices right back up. This constant battle is exactly what's creating all the choppy, back-and-forth price action we're seeing. Which brings us to a really important concept you need to grasp to understand today's market. We are in a headline-driven market. What does that mean? It means prices aren't moving based on boring old financial data or company earnings. Nope. They're moving instantly and dramatically based on whatever news alert just flashed on your phone. For right now, fundamentals have taken a back seat to headlines. Okay, so geopolitics is driving that minute-by-minute chaos. But there are other powerful, kind of slower-moving forces at work in the background. So let's zoom out a bit and look at the pressures coming from regulation and the broader economy. Over in the United States, a new regulatory proposal is making some serious waves. It's basically targeting the high interest, or yield, you can earn on stablecoins. It wants to treat them just like traditional bank deposits. Now, why does this matter? Well, if it passes, it could seriously restrict those high returns that are so common in DeFi, that's decentralized finance, and it might even slow down the pace of crypto innovation in the US. So yeah, this is a big one to keep an eye on. And then, you have the whole macroeconomic picture. This slide gives us a great snapshot. Recent job data shows slight growth, which hints at that sticky, persistent inflation. At the same time, oil prices are bouncing around with every headline from Iran, also pushing inflation higher. And all of this tells the Federal Reserve one thing: rates might just have to stay higher for longer. And high rates, that's usually bearish or negative for risk assets like crypto. It's just another layer of pressure on the market. So, we've got fast-moving geopolitics, slower-moving regulation, and this underlying economic pressure. But when you start to put all these pieces together, when you connect the dots, a really fascinating, bigger picture starts to emerge, which leads us to a huge question. Is Bitcoin becoming a whole new kind of indicator? Because here's the thing that most people are missing in all of this noise. It's not just that crypto is reacting to world events anymore. It feels like something much more fundamental is changing in the relationship between crypto and the global stage. Just look at this new chain of events. Step 1. A big geopolitical headline breaks. Step 2. The crypto markets, which never sleep, they move instantly. We're talking hours before traditional stock markets even open for business. And that leads right to step 3. Bitcoin's price action is becoming one of the very first signals of how the world feels about risk. It's not a follower anymore. It's becoming a leading indicator. And that right there is the single biggest idea to take away from all of this. The crucial point is that Bitcoin is evolving. It's becoming a real-time global macro indicator that reflects the world's gut reaction to major events as they happen. So that's a pretty mind-blowing idea, right? But what does it actually mean for you as you're trying to make sense of this market from one day to the next? Let's boil it all down into the key takeaways from today's crazy, fast-moving environment. All right, here's what you need to remember. First, the US-Iran situation is without a doubt the number one thing driving volatility right now. Second, we're in a headline-driven market. That means news is way more important than technical charts at the moment. Third, don't forget about those background pressures from US regulation and macro data. And finally, the big one. Crypto is reacting faster than traditional markets, turning it into a new kind of global bellwether. And all of this leaves us with a huge forward-looking question that's probably going to define the next chapter for this entire space. Is Bitcoin still just another risk asset getting tossed around by the news cycle? Or is it actually evolving into something much, much bigger? A true global indicator for our very uncertain times. What do you think?